Fantastic, guys. So we're looking to close out 2020 here and move into 2021. I wanted to take this opportunity and let everybody know what we were able to accomplish in 2020. It was really the first time. This is usually the time in December when I kind of take a pause, let the dust settle a little bit, evaluate how we've done, and recalibrate for the future year. Thinkers like myself, we don't ever stop. Okay. And this is our project. This is our hobby. This is a way of life for us. And so for anybody out there that is looking to find their way to an empowering message of self-directed investing, we're going to roll out and recap the results from 2020 and set some new sights on goals for 2021. Looking to bring each and every one of you guys with us on this journey, as this is an empowering message as we look within to find our own personal best, guys. So want you to stay tuned. This is going to be awesome. This is going to be an opportunity to reflect, understand, and really validate self-directed investing and understand the prospects that exist therein with a program and how liberated dollars can really be unleashed going forward by the very simple choice of taking control over your own money, guys. Stay tuned. So I will set to release this Friday evening here. I will be indisposed. This will obviously be a pre-recorded release, staying on schedule. Absolutely. Why do we do that? We do that because it means a lot to people to have awareness to stock market investing, awareness to stock market circles and discussions, understanding and really try to bring people together on how they're seeking out their own individual opportunities. And so it's very, very important for me to continue to roll out that opportunity, even if I'm not available for the live stream. That's totally fine. I'm going to record this as such. You guys need to also stay tuned because I'll be releasing the YouTube video with the summary of 2020. I always do that. It's kind of a tradition on the channel, as well as moving into 2021, some of the areas of the market that I've already taken positions in and strategically positioning my chips on the table in the manner that I feel that's going to be the most conducive to investing into 2021. Nothing too crazy. The only crazy move that I made, I'll disclose tonight on this particular stream and offering. So if you guys are catching this after the fact, you guys are going to see one major change that I made in the aggressive growth portfolio. I know some people are going to have a problem with that. That's totally fine. It made perfect sense for me. And at the end of the day, I invest for me. I don't invest for anybody else. I do what's best for me. And you guys can really take notice of that in understanding that there's a deeper philosophy, in understanding that the program that you roll out has to be right for you. It has to make sense for you. It has to be well aligned with your own strategy. And we want to be asking these questions early on in life. We don't want to be reaching into retirement age and then re-asking these questions. Did we take into consideration tax protection over our money? Did we take into consideration that, in fact, I would be there at some point in my life, and now I'm here? Do I regret the decisions that I made when I was younger and making some of those wealth building decisions? Because I know a lot of people just would willy-nilly enter into a discount broker like a Robinhood without really taking that time to think about, is this in line with my long-term perspective? Is this in line with my long-term goal? Is this decision in line with tax protecting capital? And I think if you guys are honest with those decisions that you make now, there's no perfect decision. There's nothing that says that you're going to get involved with a wealth building program and be mistake free. There's no guarantee of that at all. I just think that there's a few landmines that making your decisions, it's imperative that you identify where those landmines are and how to acknowledge them and how to mitigate or avoid them altogether in your investing decisions. And I foot stomp those, the majority of the message that I put through with regard to what I mean by tax protection. Are we opting into the right account that allows us the opportunity to tax shelter money over the course of our life as we're doing other things? Okay. Your money's sitting there doing its stuff. And some of the numbers that I'm going to declare to you guys on this video is going to account for the very best year I've had financially in 2020. It was bar none the best. We were able to double up other additional income through investing, through dividend growth, through social media, all different conduits. And it does not surprise me one bit because I'm an ambassador of self-directed investing. I take control over my own money. And I believe that anybody can do it in some form or fashion, in whatever capacity they choose. And there's going to be people who come to the message who don't resonate with the message. That's totally fine. I totally understand that. But see, I always turn it back to individual responsibility. So if you're tuning into the message for the first time and you think, man, this guy's kind of arrogant, I don't like him, I'm out. No problem. See, my message isn't about me. It's about you. And if that's the posture that you're taking, perhaps maybe there's a deeper question and maybe a lack of deeper acknowledgement to your inability to look in the mirror and ask yourself, what is possible for me? Not trying to seek out your answers on social media. That is a futile, planned failure way of going about it. Can you find good, sound financial YouTube advice on YouTube? Probably. But if you're not well directed and you don't know what you're looking for in the first place, I think you really do stand the chance of becoming a victim of poor information that's put through social media. Furthermore, I think there's an agenda a lot of the times for social media channels. Look, I want to grow my channel just like anybody. But there's a few circles out there who are remaining steadfast on a mission that this channel will grow as slow or as fast as we allow it to grow. That's totally fine, but it will never be at the expense of the end viewer. We won't do that. What we're looking to do is declare, add some merit to taking control of your own money, substantiating the decisions that could potentially be made for you. And a lot of folks out there, maybe they're putting to an existing 401k program, and they don't do anything in addition to that program. I'm going to kind of talk about my thrift savings plan during this offering and kind of let you know, look, if that's all I had, this is what it would have contributed to this year to the bottom line. And I think you guys will find that maybe in a lot of cases, there is potential there to layer up and seek out a little bit more opportunity than what you're already doing, maybe from a passive perspective, something that you've just done because it's the right thing to do, but you don't really understand the performance of those said products. And maybe there is some potential there to plus up a little bit in your own personal wealth building objectives for yourself, guys. But as I always do, I'm going to review the portfolios tonight. This is the year end. I had to film this actually during the markets open, so the values were fluctuating. So what I did is I basically took the values as displayed at the time that I took them before I filmed this video. We shook out at 85.15. So 85% stock. This is a taxable brokerage account, one of many wealth building initiatives. This was a major one. This didn't exist before 2020 in any capacity, in any investing capacity. I think there was just a few dollars in here. This was a cash savings account. that was really deployed on or around and during the pandemic lows of 2020. This has grown to a $100,000 portfolio, but this is how the positions have actually shaken out this year. So Amazon, Disney, I moved out to the outside long. Boeing, I moved to the outside long. It just seemed to make sense to take some longer positions there. Bristol Myers Squibb. So for you guys that are trying to understand what the independent investor channel and Ryan's doing going into 2021, here it is. The information's free of charge. This is actually real time how the portfolio shook out about a half hour before shooting this video for you guys, and really showing how we have been able to close out the year. Leggett & Platt and discretionary, AT&T, Duke and utilities, General Dynamics and the defense sector, as well as Lockheed Martin, Southern Company, and Hyliion. So going into 2021, Hyliion will be my horse in the speculative category. Nothing too crazy. We did avoid a landmine with Hyliion this year. A lot of people got caught up in that hype. That's really too bad. I've been able to really salvage this position, and really looking forward to the prospects going forward and having some nice growth out of Hyliion, watching them in the back half of 2021 make good on what they're proposing for their addressable market going forward. Next on the list is Roth 1. This has just been absolutely fantastic. This has done a role reversal this year. This was underperforming for the last couple years relative to the other portfolio, not relative to the market. But again, an 85-15. Interesting how the cash and allocation shook out here toward the year's end. With the S&P, I added Google into this. You're going to see why, and I'm going to explain why that strategic move was done here. Grabbing the big three, you guys saw I took a position in Amazon of 2 shares. This is a 3-share position in Google here, along with 3M, Chevron, Cisco, CVS Health, Home Depot, some Hyliion shares. This is the lightest position in here at 300 shares of Hyliion. JP Morgan Chase, Kraft Heinz, Philip Morris, Microsoft has been kind of a new addition here. And Pepsi, Pfizer, Procter & Gamble, Realty Income, very important to have those REITs within the tax protection of the Roth. Visa, European developed markets in the VEA, which has just been on fire. That's up 10% right now. Couldn't be happier with that performance. Verizon and Wells Fargo in financials there. And then Roth number 2, 110, 372, not too shabby, a little bit more heavily weighted, probably midline with regard to my cash allocation. Apple, AbbVie, that Apple position is rather large, 50 shares. We'll continue to monitor that position going forward. It's up right now. We got into it right at its 116 price entry point on Apple. And my value matrix has it overvalued here. I don't have it valued at over $100, but nonetheless, we put that position into the Roth long. It's a company that I don't mind holding long, allowing it to shake out. And if it does get some volatility, we can add to the name as it adjusts back. And CRM, Salesforce.com was also added to the Roth this year as well. That's probably my number one bullish call for 2021 is CRM. And then Facebook as well added in there. So you see a theme here out of the aggressive growth portfolio where I was able to leverage some of those positions into the new positions that I'm going to disclose to you tonight. And Coke, ExxonMobil, IBM, Johnson & Johnson, Kimberly-Clark, McDonald's, Merck, Raytheon Technology, Royal Dutch Shell, VYM, on the domestic dividends, and VYMI on the international dividends. V&Q is the only specialty ETF I hold twice. WP Carey and Walgreens Boots Alliance, as well as the Hyliion position there you can see. So a little bit more cash lean, but really midline between my 80-20 split that I talked about with regard to my cash range. So slightly weighted to the cash lean position. I'm totally fine with that going into 2021. Want to have a little bit of pay dirt set aside here for some volatility, maybe a small correction after the holiday season comes through. But couldn't be happier with the performance here. Couldn't be happier with how the portfolio has grown and evolved, and how it's shaped up at the year's end here in 2020. And then the Vanguard's specialty ETF portfolio, that won't change. That's done really, really well. Shaking out about 12,000. This has been 16 months in the making. I didn't have a chance to go back. I didn't even. Yes, I did. We are up total in this $2,789, and I have done nothing in this portfolio. Nothing. So for you guys that are just investing in the 401k and thinking, hey, this is going to be enough, well, it might very well be enough, but the question becomes, can you do more? I mean, if you've got surplus capital in your budget, why not entertain the opportunity to start on another layer in your program? You can see I have multiple layers in my program, initiating one of the strategic layers just here recently in writing covered calls. You bet. I mean, that's free premium that flows into the tax protected and the taxable account that's generated on positions that I already hold. So it just makes perfect sense for me. And the next is the aggressive growth. We went ahead and leveraged some of the profit into the ARK ETFs. This could be, I could be a hero or I could be a zero. I actually think in the short to medium term, I may end up being a zero on this. And here's why. I think they've run up so far, so fast, that I think we potentially have an adjustment period here, some consolidation, maybe some folks selling out of the ETF. That's totally fine. The purpose of the ARK ETF video that I was so beloved for on YouTube, I got so much love for that video, it wasn't even funny, was to merely suggest that the lion's share of your personal wealth should probably not be tied up in an aggressive growth fund like an ARK ETF, okay? The expense will cost you over time. And I think some of the comments that I got back through the channel were really good. Some of them were really good in saying, hey, you know, it's worth the overperformance in these to go ahead and pay the little bit of management fee to have the professionals management. I concur. And this, for me, kind of meets a strategic objective in leveraging some of the profits that I had specifically in Tesla. I was done owning the stock outright. 2020 was a great profitable year for Tesla. It was great to own the position while I did, but this was a great way to take that $5,000 of profit and roll that into my ARK ETF aggressive growth portfolio. Now I bought all 5. What I did was I used the power of M1 Finance to strategically allocate and put the lion's share, 45%, toward the ARK KK, which is their flagship. And then the next biggest percentage of allocation, I believe I shook out around a 20% clip to the genomic research, which is ARK-G. That's the next one on the list there. The other ones I liked, I saw some similarities between ARK-W. There's multiple holdings in here that do have some overlap. I'm okay with that, but I really didn't want to leave out the financials as well as the automation. The last two, ARK-Q and ARK-F. So I went ahead and just took all 5 of them. I strategically allocated, I believe, 10 and 11% for those specifics. You're going to have to wait for my aggressive growth rollout where I actually roll this out through YouTube and get a bunch of tomatoes thrown at me for my decision to leverage the single stock portfolio into this more passive vehicle. There was many things that played into this decision. Take profit off the table. That profit was long-term profit as of about 6 days, right? So that profit was eligible for long-term withdrawal. What I did is took the liquidation and the profit, rolled them back into these, and we'll monitor these passively We will dollar cost average these going forward, and it'll be really, really fun from a channel perspective to track the performance. Now, do I sleep easy owning $12,000 in ARK ETFs? Yeah, I do, because this is a relatively small portion of the portfolio. What does that mean for some of my younger viewers, maybe that only have $500 to start? Maybe it makes sense for you to use this aggressive growth portfolio. If you're interested in the ARK portfolio of ETFs, you could start this portfolio with as little as $500 using the power of M1 Finance. Whereas if you just went out and bought ARK-K, you're going to have 5 shares. You're going to have 4 shares, right, with $500. Here, I've strategically used the power of M1 Finance to split across all the different ARK ETFs. Hopefully, we can continue to get some diversified, aggressive growth out of these, out of this portfolio. Really look to leverage those dollars forward into a little bit more of a actively managed, yes, but passively held by me in this portfolio. So again, hero or zero, the verdict is still out. You guys are welcome to leave your comments and let me know what you think, or just wait for the rollout and let the grander YouTube community stone the independent investor channel, because I do anticipate that that's what's going to happen. At the end of the day, I really don't care, because I make my investing decisions for me. I don't make them for anybody else. And this, to me, just made sense. All right, moving right on, year's end shakeout for the TSP. I do want to disclose to you guys appreciation from last year to this year in this account was about 11,789. Performance was rather anemic at 14%. We did keep track with in some regards to the S&P, but here's the thing. And here's my perspective, and I know if you guys are tuning into this video, you want my twist. Okay, this is what most people do. Most people contribute to an employer-sponsored 401k, 403, 457, whatever it may be, and that's all they do, okay? Had I just done this, this would have been what I have. In other words, without the existence of some of the other investments that I make in my program, in my wealth building strategy, deploying multiple strategies, one of which I just disclosed to you with the aggressive growth, then I wouldn't have been able to net $117,000. We plussed up, 6-figure plus up this year. Couldn't have been any better. And I'm going to break that down for you guys on how the numbers shook out. I'm not really one of those folks that needs to come on to YouTube every 3 days and disclose to you how much money, because it's not a surprise to me. It's not. If I thought that the stock market investing was a futile effort, I wouldn't do this. And I certainly wouldn't be sharing the message through YouTube, because if somebody trips and falls into this opportunity, we want to set them up for the best chance of success for themselves. I'm not doing this to hurt people. Okay. I'm certainly not doing this to over lever people to aggressive type of investments. But this is really passive. This is really, really sleepy. And I think a lot of that $12,000 that was added to the TSP this year really was, it came in the form of contributed dollars. You know, this doesn't quite perform as well as the Vanguard's S&P 500. The equivalent here is 75% in the C fund. This is one of those that I passively own. I don't mess with this allocation. I don't want to be messing with the allocation and have the market go in opposite direction. That would be counterproductive to what my zigging and zagging would be in the TSP. So I know there's groups out there that you can pay to have them tell you when to shift out of this and shift out of that. Look, I, for one, don't have the time to do that. Number two is I feel like that's a futile waste of time. It's a complete waste of time to take assets like this that are meant to be held passively and try to actively manage them to gain a couple bits of alpha. You screw up one time and you're done. It screws up your year-over-year performance. And I will not do that. I will not compromise my belief in passive investing to satisfy my desire to try to get a couple points of alpha in the TSP. I won't do that. But that's how it shook out. I don't have the year-end PIP for you guys. It will increase from 1409. But that's the allocation for you guys that do have access to the TSP at this point. And then finally, the strategic addition here just recently within the last 2 weeks on the Independent Investor channel, which is something that we'll continue to chronicle and roll out. I really want to leverage my existing relationships with some of the folks in this community. Dave with Hidden Freedom Investing and Randy with Retire with Options are two of the ones that really helped motivate. And I know Matt with Matt Money as well is rolling out some of these strategic initiatives within the portfolio as well. Just something to shoot for. This is a luxury opportunity. This is not something that beginning investors need to get involved with, but for you guys that are seasoned investors, me personally, I was probably about 1 or 2 years overdue from starting to generate some premium revenue by selling premium on some of my existing positions that I had 100 shares or more in. But we've just decided to roll out that strategic initiative here with these contracts. I added Raytheon to the contract mix this week, as well as Leggett and Platt. Those were the two additions to the options for this week. So that rolls out the portfolios as they stand at the time of filming this. What I do kind of want to get into is how the 117 broke down. And I really had to look twice. I had to double check my work after, because I was like, wow, I really, in all honesty, don't pay a lot of attention. I'm of the sheer belief that if you have a good plan and a good diversified strategy, and I mean deploying multiple strategies in your application, that the results will be rendered. In other words, it's my job at the year end to look at my strategy and say, okay, this worked, and maybe this didn't work so well, and be constructively critical about your own ability and the performance that exists therein. Because I think you can get performance without ability, and I think you can get underperformance even though you did everything that you could possibly do to render performance, okay? The stock market has a funny and fickle way of really separating ego. So there's going to be people that are going to find success in stock market investing, and they do so based on a good solid program. Maybe they don't have the wherewithal, and maybe by nature of a good solid plan, they're able to really render those results. So I'm going to go through these line item, and I'm going to disclose to you how the 117 shook out over 2020. So first and foremost, I know one of my highly regarded, actually the two of my favorite YouTube channels on YouTube, both Joe Carlson and Gen X Dividend Investor, both really do have a centric focus on dividend growth investing. And there's a reason why, because it works. Okay. Now, I was a little surprised. I took a touch of liquidation this year into the fall and into the winter. So the dividends really didn't shake out quite as well as I would have liked them to. I think a realistic goal for 2021 is to embolden the dividend income, get that increased by that remaining 30%, and look to get that up to the $10,000 mark. But for 2020, the dividend shook out at $6,904. Now, that's not including a few dividends that may end up trickling in before the year's end, but for all intents and purposes, $7,000 in dividends is what we earned for 2020. That contributes to the bottom line. Dividend growth investing works. If you come into a channel and you say, well, dividend growth investing is boring, this sucks, you suck, I want money now, I want my millions before 30. Okay, by those justifications, and I don't even like to call them rationalizations, because there's nothing I can do in my channel message to help you retire before 30, nor do I even believe that that's conducive to life and and everything that's good about life. All the power to you if that's what you want to do. For those of us that are actually enjoying having our feet planted in the really real world, Dividends are a great way to make passive income. They're a great way to start your portfolio organically paying you while you're doing other things. They're a great way to compound and roll those dividends back into the underlying holdings of the security that paid the dividend. All right. So $7,000. Now, if I had just come in and scoffed at dividend growth investing many moons ago and said, no, I don't want to grow my dividend base, well, then I would be $7,000 lighter this year. The whole point to this, and the whole point to this 2020 recap, is to earmark those strategies that freaking work. They work. A lot of people would say, look, I just invest in a speculative play and it's up 20% and boom, there's my $7,000. I think you're missing the point. I think there's a lot of different ways to succeed in stock market investing, and this is just one of those avenues. Not only that, but the aggressive speculation doesn't apply to the masses. It applies to very, very few. And if I were to evaluate those individuals that were looking to engage on a speculative plan and actually look at their program, I would say that a lot of those investors don't have the proper tolerance, nor the fitness, nor the maturity to even dabble in that line of investing thought or strategy. So dividends make sense for the masses, and make sense whether or not you're older, whether or not you're younger. Now, I will premise this: anybody less than 35 years old, I think you might run the risk of causing a little bit more slowdown in the portfolio if you're seeking out just a strictly dividend growth portfolio, unless you've got the income to supplement and really overfund that account. Then you don't care about keeping pace with the S&P 500 because you're just looking for a safe drop point to put your money. Okay. And dividend growth investing really does help deliver on that front. Okay. Now, the lion's share of the 117 this year came from swing trading activity. I couldn't quite make it to 50,000, but I was close. $49,175 of green profit in the account. That's a beast. 5 stacks of high society swing trading, doing what I do with channeling stock. And a lot of you guys might tune in and say, you're a bozo, you don't know what you're doing. Fine and dandy. Again, this channel is not about me. Okay. I declare these personal numbers to you because that's what they are. The question becomes, again, just like I mentioned at the top of the stream, do you have the courage to look in the mirror and say, A, I'm doing everything that I need to do. I'm awesome. Leave me alone. You suck and I'm awesome. Or number 2, maybe there's room for improvement. And I think a lot of people out there, myself included, tend to fall in the latter camp of identifying within ourselves how we can improve on this. You never hear me come onto YouTube and say, I've got this thing licked. You should follow me because I'm awesome and you suck and you need my tutelage to succeed in stock market investing. And if you don't have me shepherding you through the valley of the shadow of darkness, you will fail. You'll never hear me say that because that's idiotic. All right. Nobody has the answers when it comes to stock market investing. And I would say that for the most part, most people inward have those answers and can answer those questions for themselves, because the level of risk that you take on in the stock market is defined in a box. Okay. There's only a certain number of ETFs, index funds, and stocks that are out there. You want to broaden the landscape beyond the S&P 500 or beyond the Dow 30 gems of the stock market. By all means, go ahead. But I think the more you look to expand the stock market, I think the more futile you get in really trying to understand that the Home Depot and the Walmart and the Costco's of the world are right there in front of your face. And all too often, those are the best investments that can stand the test of time for anybody. So if I've just given you the skeleton key to investing and really looking at it and saying, Jesus, that makes sense. I like Visa. I use Visa. I like Microsoft. I like Apple. You mean I can invest in these companies? Yes, you can. Right. So once you put that aside and you stop looking beyond the horizon at all these other 2,000, 5,000, 10,000 other stocks out there that aren't very well covered, then you start to digress and look at, wow, investing really is kind of summed down and watered down into a very, very specific opportunity. Then the nature becomes, how do I want to engage? Okay. And for you guys that just heard that swing trading number, I don't 49,175, that was the number. All right. We realized short-term losses of $830. We had short-term gains of 49,175. That's spackled throughout the tax protected, which those gains will be protected. Some in the brokerage account as well. Those will be taxed as earnings as such. So the IRS is going to love me next year. No big deal. We'll pay those. I was able to use my money to generate income. That's basically what it is. Taking money and generating it out of thin air. If you guys heard what I just said, that's some cool stuff, man. You know, did he just say that? You mean I don't have to get lucky? No, you don't. No, you just have to pay attention. That's channeling stocks, swing trading 101, 49,175. It was, in fact, my best year. I doubled my 2019 performance, which was 25,000. I'll double that. I don't know. That's a pretty high bar to set. I had a couple of really good stocks that I was able to, at the end of the year, switchback warrants was a $10,000 bill. And then Boeing was my biggest single trade of the year, rendering just over 10,000 of swing trading profits during the pandemic low. Had I had that to do over again, I would have played it differently, but woulda, coulda, shoulda. That's the game we play in the stock market, right? I've already mentioned the TSP as well. 11,789 in appreciation there. And then a total appreciation in the accounts went from 243 at the start of last year all the way up to we're dabbling with 344 here at the end of this year. So the number was $117,258 from when we entered into 2019 into 2020. What are the takeaways from this message? And this is where I'm going to speak from the heart. Okay. I do this message for you. I invest for my family. Okay. So let me put that in perspective a little bit for you. Those numbers that I just declared to you, those are a byproduct of a 100% deployed self-directed program. Okay. So I really want you to think, if you're catching this message, I have a lot of people who admit to me they catch my message and they do not comment. They sit back, they listen to my message, they look at my facial expressions, and they can tell I'm dead serious about this topic. Dead serious. Now, I'm not very well polished, okay? I'm not an entertainer. I come on, I offer my story as a testimonial for somebody that may impact get the impasse of $500,000 met and surpassed in 2021. I think that's more than doable. And along with the dividend income to boost up to the 10,000 minimum rendered per year, as well as the $500,000 portfolio mark, which I do believe we will. In fact, we have too many strategic buckets not to hit that. All the chips are on the table to meet that goal. That's great. But for you guys out there that are tuning into this message and saying, what is the rendering result? What does Ryan mean all the time when he says take control of your own money? It's cliche, Ryan. You keep saying it all the time. What do you mean? Well, this is the granular results, okay? And again, I don't roll these out but once a year for the total overall portfolio review. I don't do that. Going into 2021, I will put my nose to the grindstone and start grinding away again at the wealth building initiative. Why? It's in pursuance of my financial goals that I go at this program with ferocity. Okay. Now let that sink in for a second. Remember how I talked about investing, not even registering on the priority list for a lot of investors out there? For me, it's right up at the top. So if you guys are entering into 2021 and you're wondering about a New Year's resolution, sure, if you want to lose 20 pounds, go ahead. If you want to change your diet, great. If you'd like to exercise more, you can do that too. Why not add adding a financial slice to your life. Okay. Now, I'm not going to give you all the answers. I'm not going to do that. What I'm going to do is define whether or not you define it for yourself that that slice should exist. So define it. Okay. Define the structure, define the barriers, define what it is that you want to do to get your start. Okay. You don't need to engage in speculation right off the bat. You don't. Become an investor first. Okay. Take those baby steps into entering into a nice passive S&P participating posture in the market for yourself so you can get used to understanding the difference between looking at the static dollars in your savings account as opposed to your active dollars in your investing accounts, right? Those active dollars are going to fluctuate up and down. The idea is that we're putting them on a program to be liberated and grow over time, tax protected and wealth preserved. All right. And the underlying takeaway from the 117,258 is the way that we've been able to tax protect and we've been able to wealth preserve a lot of those dollars, especially 2/3 of those dollars, I will be fair, in the Roth IRAs that I have, because the quicker we can generate those dollars up to that retirement target, the better off that we'll be. All right. So that's the recap for 2020. I couldn't be prouder. I take this stuff very seriously. It would be very, very difficult for me to sit across from a YouTube audience in whatever size of capacity I'm able to garner and say that it's possible to render results in the stock market and then turn the other cheek and say, well, I lost 20% or I lost 50% of my money, or I took on way, way too much risk in the market. And I now I'm down so much. That's just not how it shook out. So when I say all the time that this channel really does represent a testimonial of my own self-directed application in the market, that's really what you should take it. And I deliver this message in such a way that if I was sitting on the receiving end of this, what is it that I could say to get you excited about the prospects of taking control of your own money? What is it that I could demonstrate to you as far as what's possible? What's possible in dividend growth investing? Well, a portfolio that renders 7,000 in 2020, right? What is possible with the opportunity to do a little swing trading? I mean, I've got people in my community in their 70s and 80s that engage in swing trading activity. Why? Because we are starting to blow down barriers, if not already blowing down barriers for retail investors. Okay. Let me tell you, going into 2021, 2020 was a wake-up call for a lot of institutional investors that have really gotten used to underperforming the market, and then telling people, hey, it's okay, there's always next year. All right, go ahead and pay me your 20% fee right off the top. But I worked really, really hard to lose you 20% in my hedge fund. The game is changing. The access to information is changing. And I think there are certain levels of entry into the market. I don't think there's any safer way of entering into the market than a passive investor with a low-cost ETF. I don't think there's a better way. And if you can explain to me why you need a financial planner in that arrangement, go ahead. But the game is changing. All right. The game is changing. And there's a few voices like myself that put it right out there up front and call it for what it is. And that is, you are leveraging the power of technology. You're leveraging the power of where the industry is going by taking control of your own money, cutting out the middleman, because the secret is being exposed as to what those costs will cost an individual investor over time. They really will. And furthermore, I think that there's other products, legacy products, that are being identified, life cycle funds and life evolving funds that you just fund over time. I also think that those products as well are being evaluated. And can you take a cookie cutter portfolio that adjusts over time and make it apply to the masses? I contend no. I think there's investors out there now that are coming to me that are 60, 70, 80 years old that have entered into retirement, having been contributing to a life cycle fund their entire life. And now they're like, I'd love to invest in some Amazon and Google, but now look at my life cycle fund. It's built me up a nest egg of bond funds now. I don't want to be in bonds right now. Maybe a good lion's share of my money in bonds, but how long has it been sitting in bonds, you know, unbeknownst to my own strategy and my own desire to put a little bit more risk on the table because I have certain other things in place. The game is changing. Make no mistake about it, guys. This is the most exciting time to be an investor. And moving into 2021, it's not going to change. I do anticipate that there will be volatility moving into 2021. Cool heads will prevail in investing. There will be people that panic out of the market. Will you be one of them? These are some of the rhetorical questions. Usually when the market gets cranky, that's when my channel really takes an uptick. But when things are crazy and everybody's getting rich in SPAC investing, the verdict is still out on that as far as I'm concerned. I own one speculative play and that's good. I'm good with that risk exposure. If there are people out there getting rich with SPAC investing and highly speculative calls in the EV space and the solar space, great. I think my friend Gen X Dividend Investor on his last upload framed it quite nicely. I think it's extremely attractive when you come out and you say that these stocks are going to 2x, 5x, 10x, 50x, 100x. The problem is that people have a short memory and they don't go back and cross-check those releases to see the actual performance after those self-induced self-initiative induced releases through YouTube are performing over time. So I think a lot of people are bandwagon investing, and I think a lot of people need to take a lot more personal responsibility for their own actions in the stock market, and I think they need to be held accountable. My heart goes out to people who invested in Hyliion above 50. Do I think the stock will ever be above 50? I do. My first look at the stock isn't at 50; it's at 100. Okay, and I'll chronicle the trade all the way through. Those videos that I released, those still stand. Those investor presentations that I covered and did so because I wanted to, because I was really interested in the company, those still stand, right? Just because it doesn't happen when investors think that it needs to happen for them to make themselves rich again overnight so they can trip and fall into their Ferrari or retire at 30. Again, my solutions on my channel are not geared toward that. The solutions on my channel and what I represent through my company have everything to do with seeking those strategic initiatives and leveraging the one thing that we are all gifted in this life, as finite as some may be, and as longevity as some may be, and that is time. And I think so many people just sell time down the river for the sake of the extra buck. Gen X said that a lot of people are trying to cut in line. There is no shortcuts in life. You might win over the short term, but over the long term, odds are you will probably lose. All right. So we want to earmark those strategies in a wealth building program to make sure that you can enjoy other aspects of life. You can get this thing right and you can enjoy other aspects in life. This 117 that I told you, 40% of that, the 50,000 that was rendered, that did take some activity. Okay. It really did. But the other dollars, the 5,000 in the aggressive growth, the 3,000 in the passive, that was an $8,000 bill that required zero effort. The 7,000 in dividends, that required zero effort, right? So once the well-laid plan and the tracks are laid, you can start running the train over the tracks as much as you want, right? It's not going anywhere. As soon as you put a well-laid plan in place that makes sense for you and your own risk tolerance, well, then that's the very time that you can go ahead and start to focus on other areas of wealth building. For me, that's real estate. For me, that's alternative investing. I'm looking into precious metals. I really am bullish on silver. That's why some of the coverage videos that I do and the promo videos that I'll do continuing into 2021, those will not stop. Those are very lucrative for me. I've earned the opportunity to deliver those coverage videos to people. And I just think it's dang interesting. I enjoy the heck out of going in and doing a deep dive. I've never heard of any of these companies that I've been provided the opportunity to cover. And so I'm a dork. I'll sit there and geek out on a company for, 2-3 hours and do my deep dive and then deliver my 12-minute video to people. And just another aspect of how the channel is evolving with people. Make no mistake, moving into 2021, we will be reconvening the live stream the first Friday in January. This is a super important conduit to the message. And I want to make sure that we're providing 10x the value to the subscriber base and prospective subscribers to the message, and understanding that we deliver a consistent message. While the allure and temptation to go elsewhere and seek out the fly-by-the-night type of opportunities out there, value investing will be around and stand the test of time inevitably. And that will be the message and the core root of the message that we roll out, along with deploying some additional strategies, a little more aggressive in some cases, yes. But we want to try to appeal to all the investors out there looking to wealth build and engage in a wealth building program for yourselves. So as we close out 2020, I'd like to take this opportunity. We reviewed the 2020 numbers. I'd like to take this opportunity from the bottom of my heart to thank each and every one of you guys for being part of this community. I say it in a lot of different forms and fashions, but this is the truth. The truth of this community is that it exists and is predicated upon the strength of individuals. If we cannot scale a message, then what are we doing? What are we doing? And I continue to offer this message going into, I think, year 4 of the Independent Investor Channel, knowing full well that thousands and thousands of people out there need to hear what I have to say with regard to the personal empowerment piece, the initiating a strategy that is in line with your own personal tolerance to risk. Yep. Engaging in a wealth building program in a capacity that makes sense for you. And I contend that it makes sense for all people. I do. If you're out there and you're trying to excuse yourself from the opportunity made possible by a wealth building and an investing strategy, you're welcome to do so. I would just be the first to disagree with you. I think everybody needs to do this. I think everybody needs to try to identify the surplus. This is important. I think a lot of people justify spending their surplus on a lot of things in this life that are not conducive to wealth building, that actually detract from having any type of sizable wealth into their future. Big luxurious cars that are unnecessary, too big of a house or a personal dwelling that is beyond their means. I think all the time we look to sell the farm and we don't look to put investing on the priority scale and identify and justify for ourselves that there is surplus in our budgets, no matter how small or no matter how large. It's incredible to me that investing is relative. Wealth building discipline does not discriminate. It does not. There are people with money in this life that are a complete disaster. There are people in this life that have money that should have 10x what they have now, but they don't have it. And on the flip side of it, there's people who do penny pinch. They do run through a budget. They do watch their spending. They know exactly what their surplus capital is, and they aren't afraid to leverage the power of that surplus capital and engage in a wealth building program. Why? Because they feel like the prospects of wealth building are much more conducive to the alternative. And the alternative is succumbing to temptation to blow that surplus capital each and every month with the inflow and the outflow that comes into our household income. All right, guys. As we enter into 2021, the projects, I will just close out 2020 and letting you guys know, we closed the Viper group with 39 members. if you are catching this, at the time of release of this video, the sale will be on for one more day. I will retract that. The price to get into the Viper group will close. In essence, my focus will engage on the people who in 2020 have made the commitment to their own personal empowerment journey, and we are doing that one investor at a time. This really allows me to up the ante. It allows me to provide one-on-one opportunity with people out there from all walks of life, from all over the world, who are coming to this empowering message and understanding that if you have the opportunity to sit one-on-one with me, your life will change. It will change. It will change, okay? In some degree or another, in some form or fashion, I will identify with my prism and my lens and with my expertise in wealth building for people what it is going to be best for you in reducing your spending habits, getting the budget under control, identifying different strategies that so many people in this community deploy and succeed with over and over and over again. So my focus in 2021 until the summertime, you guys can earmark, I will do a short fuse, probably a 1-month special in the summer in the Viper group. But other than that, that will close. And I will look to build out that product with Slack and WhatsApp and the opportunity that we have in that group with my empowered core of Viper investors. The podcast project is coming along nicely. We've entered into season 3. I will actually do a 117 recap 2020 podcast. I will be filming that actually today after I get done with this. So if you're not subscribed to the Independent Investor Podcast, you can find me all over Anchor.com, Shopify, Apple Podcast seems to be the most popular spot to find the Independent Investor Podcast. 70% of people would prefer to catch their content that way. That way you don't have to look at my ugly mug while I deliver my message. That's totally fine too. But the Facebook group will continue to evolve and grow. The live stream will continue to grow and evolve as we look to grow this project into 2021 and beyond. Doing everything I can possibly do to remain relevant, to remain on multiple social media platforms, rendering those opportunities for you guys. I can't think of any more strategic way to do that than the way that we've been able to do that. And a lot of it has come to a head and come to reality here in 2020 for you guys. If you are part of the Independent Investor Channel community, I will just close in saying this. Congratulations. If I had this message 20 years ago, I would already have $1 million in the bank. No question about it. No holds, no bar. If you want to go and pursue wealth building in other capacities, all the best of luck to you. But this is the very, very best way I know how to build wealth, how to scale the information so that regular people can look at it and say, wow, can I dare to dream to do this? Can I engage in this opportunity myself? You sure can. And you can make it work in the way that I've made it work in such a short amount of time. Again, just avoiding some of the temptation, avoiding some of those landmines that I talked about earlier on in life. There's some young folks in my community here that have found their way on my message. I always say, well, first of all, congratulations, because you found a gold mine. Second of which, don't get distracted. I've said from the very, very beginning that this is the easiest, most difficult program that you'll ever deploy because it's easy to deploy. What's difficult is to stay the course. What's difficult is to avoid distraction. What's difficult is when you start to second guess yourself and your own program, and especially your own capability. Are you going to have the ability to persevere through those hard times? And it's easy to be an investor when we're at market all-time highs. It's easy to be an investor when everybody out there is seemingly making lots of dollars, that of which, case in point, I've disclosed to you now. What really separates the pretenders from the investors is your ability to persevere when things are not good, when things are down, when the stock market is seemingly going down every single day. Those are the times when you want to remain steadfast, understand, and really resonate with why you do with what you do as a self-directed investor, guys. So with that, we'll close it down for 2020. Thank you so much to the subscribers and the viewers and visitors of the Independent Investor channel alike. Stay tuned for much more as we roll out this project and further the message to empower one investor at a time going into 2021. Thank you so much, guys, and take it easy.